Thank you for joining us for today's panel. It marks the first of a series of online events that will examine issues affecting the modern consumer. Today's discussion focuses on the difference between the number of consumer protection regulations and disclosures that are required for most types of consumer lending versus the relative dearth required for education finance. This is especially interesting given that student loan debt is generally non-dischargeable in bankruptcy. Our moderator for today's discussion is Brian Knight, who is a Director for Innovation and Governance and a Senior Research Fellow for the Mercatus Center at George Mason University. Before I hand it over to Brian to introduce today's panelists and further set the table for the discussion, I would like to note for our viewers that next month's event will be a discussion with Brian regarding his research on the growing politicization of the banking system and what that means for the average consumer. So please keep an eye out as we announce the date and time of that in the coming weeks. With that, Brian, the floor is yours.
Thanks so much, Will. So I have the seminal pleasure of moderating a panel with some very distinguished panelists, all knowledgeable, and I think we're going to have a great conversation. So let me get started. First, to introduce our panelists, we have Tom Miller Jr., a professor of finance and the inaugural holder of the Jack Lee Chair of Financial and Consumer Finance at Mississippi State University. He's a member of the Academic Research Council of the CFPB, where he reports to the director. He's also an adjunct scholar at the Cato Institute and a senior affiliated fellow emeritus at the Mercatus Center. Next, we have Neal McCluskey, who's the director of Cato's Center for Educational Freedom. He's an author of the book Feds in the Classroom: How Big Government Corrupts, Cripples, and Compromises American Education, and the co-editor of Unprofitable Schooling: Examining Causes of and Fixes for America's Broken Ivory Tower. Finally, we have Bob Stein, who's a deputy chief economist. He's responsible for forecasts at First Trust. He's responsible for forecasting and analyzing economic indicators as well as writing economic commentaries. Prior to joining First Trust, he was an assistant secretary for economic policy at the Treasury Department, where he worked for briefings of the Secretary of the Treasury on U.S. macroeconomic developments and formulating policy proposals. He was also the chief economist for the Senate Budget Committee. So with that, all too brief intro in place, I will let our panelists start laying out their view on the student loan market and what is going on here, where is it broken, and where fixes might lie. And so we're going to start with Tom Miller. So Tom, the floor is yours.
Thank you, Brian. It's an honor to be here. Thank you for the invitation, Will and Bo. I actually teach in the Ivory Tower, so student loan debt is kind of is all around me. I guess when I was asked to be on this panel, I sat down and thought of some things that I wanted just to say briefly, just to not get into depth. I'll pass the floor off to Bob and Neal. But it's like any issue we have that faces society, any big problem that we have, it's something that has occurred over the last couple of decades, if not 3 or 4 decades. So this student loan debt problem that we have has not just appeared overnight. It has grown over time. As when I was associate dean at St. Louis University, I went around and I talked to everybody who taught liberal arts to our business school students to ensure quality for our students. They had some complaints, and so I went from department to department. And I'm a big fan of a broad-based liberal arts education. I think business school students sometimes get lost in the idea that they should only be an accountant instead of learning how to read and write and think. But I disagreed with them, and I still do. I still am a big fan of liberal arts education. The other thing that when I read the literature here on our Consumers Research website, it just struck me that, student loan debt is different. A college education is a different product than consumer durables like washer and dryer, refrigerator, where, you can buy a warranty and get it fixed and there's a specific contract for performance. College degree is different from that, in my opinion. Now, I do think there's some problems in the student loan debt, particularly, or in the market itself. I study small dollar lending mostly these days, and in that market, there's such a thing as just generally accepted good principles, business practices, sound lending practices like estimating ability to repay, underwriting, being very transparent in what the loan product is. I don't think we have some of the student loan market seems to lack a few of those things. And you know, at the end, I don't support canceling any student debt for any reason. I'm just not. I think that's a contract that people have entered into. Maybe, I don't know if they were hoodwinked or not, but they've entered into this contract. I think it should remain non-dischargeable, and for any reason, if you join the Peace Corps or anything else, I think it should stay. Now, I do think that we could have some programs to help people out, pathways out of this debt, and have perhaps have some when a student loan program, debt program, you take another job, if the student loan debt is, the repayments are canceled, the interest still accrues. And I think that's abysmal. And I also think that the interest rate that's charged by the government, I don't know how this come up with. So with that, I mean, that's just my opening feelings, a few bullet points on the issue. So I will pass the mic back to Brian.
Thank you very much, Tom. Next, let's hear from Neal.
Sure. Thank you, and thanks for having me today. I'm going to sort of talk about a little bit about the motivation behind the student loans. And basically, it's a story that probably people have heard before about the road to hell is paved with good intentions. I think that if you look at the history of federal student aid, which includes federal student loans, and we should be clear that the vast majority of aid that goes to students in higher education is from the federal government. The goals were typically good goals, but as is often the case, I think we had far too little analysis of setting aside our goals. What are all the things that are likely to happen with massive subsidization of students as they consume higher ed, and what might all the negatives be? If we really care, we need to look at all those things, but if we look at all those things, we have to start concluding that federal student aid is probably a net loss for society and often for people who get the loans in the student loan program. So the goal was certainly to make college more accessible and more affordable. You would really start with the GI Bill after World War II. Of course, the goal in that case was not just to make college affordable, but to make sure that you didn't have a whole lot of people suddenly looking for jobs. But that was the beginning of student aid, but that wasn't particularly broad. That was only for people returning from war. We have another GI Bill after the Korean War. It's not till you get to the Great Society that you have this idea that, well, we should have aid that's more broad. Again, the goal was no longer just about if you had served the country, but it was about low-income people. And they said, well, certainly we want to have grants, the Pell Grant program. But over time, what you have is people saying, well, if low-income people can get aid, then middle-income people should get aid. And we need more aid because now the price is going up and demand is going up for higher education. And people say, well, people in Washington, well, let's create student loan programs. So it's not the same as a grant. You're expected to pay this money back, but it's something that is more geared toward middle income folks. What we don't think about is what's the effect going to be of all these things on price and on demand. Certainly it drives up demand. But it also enables colleges to raise their prices because they know that increasingly the federal government is giving people access to money that's not their own, first through grants, but then through loans where the lender is really, it's the taxpayer's money, but each taxpayer doesn't get to give their consent to have this money given out. And so you have this increasing demand, you have increasing price. And, often when I started firstly in this, I used to say, well, these colleges are just so greedy. They raise their prices because they can and they just want lots of money. I actually think often the colleges think, well, we have good stuff we could do if we just had more money. Another building, another program, paying staff more, something like that. And there's a flip side to this, and there's some research on it, that they're also in a difficult position because students, the more money they have, other than sort of the very top academic performers, are often choosing colleges when they're choosing among colleges based on amenities. So the schools often have to provide expensive amenities because students demand them, and they demand them with somebody else's money. So we haven't really thought through, or even if we thought through, politicians and policymakers don't apply thoughts about unintended consequences when they champion a program like student loans. They just say, well, we got to make college more affordable. The price is X right now. If we give people loans, they can pay X, and that's all we have to think about. And, you know, of course, the window for a policymaker is typically, I just have to make people happy till the next election. And it's very hard for most people who are confronted, you know, voters are confronted with thousands of policy issues potentially, to say, I'm going to really focus on student aid, and then I'm going to find out all the negative ramifications of aid. But we can actually I'm just going to give very few bullet points of data that show how wasteful this system is, and we can certainly get into it more. But generally, people say, well, it's okay to go to college because, you know, roughly you earn $1 million more of your lifetime if you go to college than if you don't. And sort of on average, that's true. There's lots of ways that $1 million is reduced if you think about what if I had put that money in an investment. But setting that aside, you can say the average person with a college degree still earns about $1 million more of their lifetime than somebody without. And they say, well, so everybody should get money and that they get that degree. But we give lots of loans to people who have demonstrated very little ability to pursue a degree program that is for a field that's in demand, and not just pursue that program, but finish, because the federal government's incentive is give as many loans out as possible, not worry about will people finish, because the policymaker wants to be Santa Claus and doesn't have the end result attached to them. So the first problem is we have about maybe 60% of people who start a bachelor's degree will finish within 6 years. Many of those people won't finish, and if you don't get that degree, you don't get that earnings premium, but you still have that debt. The federal government is thus saddling millions of people with debt, and they had very little expectation that those people would complete the program they need to pay off that debt. On the flip side, there are about a third of people in careers, so not just recent graduates who haven't gotten a job that requires a degree yet, but about a third of people are in careers. A third of people with bachelor's degrees are in careers that don't require that degree. In other words, they are underemployed, because we also incentivize everyone to get a degree without really thinking, do I need the degree for the thing I'm going to do? So these are just some examples of the massive waste that we have. So we'd be better off if the federal government got out of lending and lending were made private, because a private lender has an incentive to talk to a potential borrower and say, look, potential borrower, I'm looking at your GPA, your standardized test scores, what it is you hope to study, and it's very clear to me that you will not be able to complete a degree program that enables you to comfortably, or even maybe at all, pay back the debt you'd like to take on. It's not worth it to me as the lender to take that risk. And that's a very powerful message the federal government never gives to potential borrowers, that it's a bad idea for that potential borrower, that potential student, to pursue the debt and degree that they want to follow. So we want private lending, not just because it gets taxpayers off the hook, but because that's what's good for many borrowers who right now get saddled with debt that there's very little expectation they can pay back. Then the question is, well, what about bankruptcy? So currently student loans are very difficult to discharge in bankruptcy. It's not impossible. You have to prove some extreme hardship, but it's very hard to discharge the student loans in bankruptcy. I totally agree with Tom that it's a big problem, especially if you have federal loans, for those to be dischargeable, because we have to remember, again, taxpayers are the ones who have provided the money for those loans, and they didn't have any say in any given loan. And it would be a very bad policy, I would say unjust, to say, well, we're going to forgive that money, and those people who we took the money from, they are not made whole, and there's no expectation they'll be made whole. The other thing about But the sort of the flip side of discharging in bankruptcy is it would, I think, be beneficial if private loans going forward and in a really private lending industry, not where there's federal domination, if student loans could be discharged in sort of normal bankruptcy procedures, because that increases the incentives of the borrower to really scrutinize that lender, which, incentivizes the lender to scrutinize that borrower. It's so easy to confuse these things, which redounds to the benefit, again, of that potential borrower. If somebody is looking very seriously and objectively at them and saying, what you want to do is a bad idea for me, if I were to invest in you, which means a bad idea for you because you want to take on debt you probably won't be able to pay off. So I do think going forward, if we were to phase out federal student aid or greatly shrink it, including student loans, and move to a private lending industry, that there would be good reason to allow student loans to be discharged in bankruptcy like other debt. Thank you.
Bob?
Yeah, thanks for inviting me here today. I kind of look at it, look at the program a little bit differently. I've been an economist with a financial firm for the past, I guess, 13 and a half years, I guess 14 years in December. Before that, I spent 4 years at the Treasury Department, and before that, 7 years on Capitol Hill. So I'm kind of really tuned in with two things, kind of breaking down the system from the outside into what I believe it really is, and then trying to figure out a politically feasible solution. I agree with Neal and most likely Tom as well in terms of how the student loan program originated. It was designed to take kids who might not otherwise go to college, who could benefit from a college education, and allow them to earn more money. But that's not what the student loan program is today. And I know it's a little bit of a radical way of looking at it. The student loan program essentially, and I say this, present company accepted. Student loan program essentially is a job subsidy program and a wage subsidy program for the people who administer and teach in these institutions. That's all it is. They use the kids as mules to bring money from income taxpayers to these institutions. They shower cash on them, and then whether or not these institutions actually provide a valuable education is secondary. Whether or not these institutions are accepting kids who could actually use a valuable education or are worthy sponges for the education if it were offered, that's secondary. It's about a jobs program for people with college degrees who administer and teach in these institutions. Whether they teach anything of value is completely secondary at this point. And I think it explains a lot of what's going on campuses around the country, because the kinds of people who litter many of these institutions have no marketable skills at all, other than the fact that they have a sheepskin from some other education institution. And what I think we need to do is move in the direction of having the schools that accept these loans guarantee a significant portion, I would say 50% of the loans, so that if a graduate defaults on their loan, then the federal government will have recourse to the institution with a clawback, similar to the way a clawback was instituted for bank salaries and bonuses at large financial institutions after the financial crisis. There'd be a clawback from these institutions, and these institutions would probably have to set up reserve systems just in case their kids ended up defaulting on the loans. Here's the key with this. This can be done through the budget reconciliation process up on Capitol Hill in the U.S. Senate. I used to be the chief economist for the Senate Budget Committee in a former life a couple decades ago. Simple majority in the House, simple majority in the U.S. Senate, because it's a revenue gainer for the federal government, and support from a president could enact this policy. I do not see any reasonable environment politically going over the next generation in which the student loan program, which used to be a guaranteed loan program, the federal government would essentially guarantee the loans, but private lenders would make them, is going to revert back to the private sector now that the federal government has taken it over. I wish it were true, and I just don't think it's feasible. I don't think it's legislatively going to happen. And if it did happen, there'd still be the guarantee, so you'd still have the same problem. where the money is just going to professors and administrators. And what I say in my speeches, I'll say it today, they pack a ponytailed Marxist who have no marketable skills. We need to do something to get those institutions to have skin in the game each and every time they accept a student who's going to use student loans at these institutions, each and every time, so that they do not have an incentive to accept students who are not worthy of the institutions. And when they accept them, they have an incentive to teach them marketable skills to generate funds in the future. Now, some people say to me, well, you know, if the kid is not liable for 50% of the student loan, they'll just graduate in default. Now, I would say that the institution could go collect from their former student 50% of that money. They could just subordinate that debt to that, but they would have to directly, this institution itself would have to be directly liable to the federal government for 50%, and then the kid, or the graduate at this point, they can go after them directly. They could hire their own collection agency and go after their former student. Either way, put skin in the game and get these institutions on the hook.
Thank you, Bob. So what I'd like to do is I'd like to, ask the other panelists, Tom in particular, you work at one of these institutions. I don't see a ponytail. So, but nope. Okay. No ponytail. Check. So,
just to be clear, there are many Marxists who don't have ponytails. It's more of a metaphor.
Okay. So, Tom, to my knowledge, you are not a Marxist, but who knows, whatever. Does Bob's analysis, how much does that ring true with you? Not in terms of the ponytailed Marxism, but in terms of the incentives to empire build among educational institutions. How does that ring to you?
Bob brings up some good points, but at a state university like where I'm employed, we have state laws that govern how we accept students. So basically at Mississippi State, we are compelled to accept everybody that shows up, just about. I mean, that's a minimum test scores, and I see a difference in my classroom between groups of students who've gone through the community college route to get into state versus directly from high schools. Quite shocking, the performance difference. And this is in finance. This is, you would hope that was a marketable degree program. In my career, which spans more years than I can't remember when I first started doing this actually, but the number of administrators has just ballooned on campus. And I don't know if that's because of I just don't know why that's happened. Is it because we've accepted a lot more federal money for lots of different things and we need administrators to run various government programs? I don't know. But as a faculty member, we don't enjoy much in terms of the way of raises or spectacular incomes or even additional help. We don't have a bench. Every one of our professors is fully engaged. And if we want to try to offer a new program or new course, we have to shuffle the deck chairs on the Titanic to accomplish that. We just can't, we just don't have that. I think the universities, in my experience lately anyway, is that we all know that revenue equals price times quantity. And the focus is on the Q in universities. It's a numbers game. We need more students. And I've argued that, revenue is equal price times quantity. And at Mississippi State, we can't raise the price on any program. It's the same price for every program. In fact, the Institute for Higher Learning sits over the state universities in Mississippi. They make all the decisions on pricing anyway. So, to my knowledge anyway. And again, I am just down in the boiler room teaching my classes and just kind of wondering what's going on up above, up on the deck. the you know, it just seems to me that being I just think the pushback would be a college degree is not the same thing as a toaster or an automobile, and the university is really not a party to the debt, and so making them responsible for a debt decision that's made outside, even if it's a private company who's made their best guess that this student can perform, they come to college and they just drop out for whatever reason and they default. The university is certainly, in that instance, they've had the better students, but they still are on the hook for a default that they've had no choice in the matter in some sense. So, you know, it's an intriguing idea. I'm for responsibility. I'm for incentives. You know, I believe that incentives matter. I will just say, as an aside, during COVID, when it started in March, nobody could get a haircut, right? And I was due for a haircut. And so I thought I could grow a ponytail for the very first time in my life, but I didn't, my hair didn't get long enough for that to happen. But that's just an aside. And actually, one of my neighbors is a Vietnam POW, and I had big hair going and a big bushy beard. He slams on the brakes, and he just leans out the window of his car and says, "You go get your hair cut." He says, "That's not who you are." So I said, "Yes, sir, Captain. I figure out a way to do it." But I, you know, it's. I don't disagree that, you know, that something, you know, the system going forward can be changed. I think the students who are already, the contracts that are already in place, I don't see how we can go back necessarily and waive those like some presidential candidates would like to forgive student loan debt. I think that's, you know, I agree with Neal is that, hey, we taxpayers footed that bill. And to the extent that the government sells any of that debt to anybody else, certainly can't forgive the debt of somebody else. But anyway, so I don't want to monopolize time. I mean, I'm a college professor, you know, it takes me about 35, 40 minutes to get revved up and before I start rolling. But anyway, I'll just pass the floor back to Brian.
Thanks. So before we go back to the panelists, I was remiss I failed to mention that the audience can ask questions. And actually, we're starting to get some questions in the queue, so we can pull from those. Actually, let's pull from one now. So, and you know, I feel like a couple of you guys alluded to this, but you know, should we have variable pricing on degree plans, and if so, what variables should be considered when you're deciding to charge, you know, one 18-year-old 2%, one 18-year-old 5%? Like, what are the relevant variables that should be considered, if we should consider any at all?
And so is the question on the debt or on the actual degree program?
So as I understand the question, it would be basically like the type of degree program you pursue would affect what rate you are charged. And you know, potentially this could even apply if we assume that the federal government retains its role, right? Instead of charging everyone basically a flat rate, should they introduce at least some measure of risk pricing?
Okay, I'm not clear if the variable pricing applies to the tuition price or to the interest rate on student loan debt.
I believe the interest rate.
Okay.
Well,
So Neal, I saw you nodding your head.
sure. I mean, I'll venture an answer to that. I think that the more we tailor loans to the characteristics of the person borrowing or trying to borrow and what it is they want to pursue, the better. I don't really trust the federal government to do this. Their incentive is always to sort of just give out money as easily as possible. But it makes sense to say to the borrower, look, if you're going to study mechanical engineering or I don't know why I can't remember the kind of engineering, a petroleum engineer, which was really the top paying field for people to get paid when they graduate as an undergraduate. If you were a petroleum engineering major for a long time, you were making the most money right out of college. We should be saying to somebody like that, if you're going to pursue petroleum engineering and you have the academic background, we think you'll succeed, you should charge that person, I think, probably a lower interest rate, because the risk for the lender isn't as great. And if we send that message, you know, that's useful. That said, I am hesitant to ever say, well, this is how an entire market should look. The way the market should sort of sift out what rates it's charging whom is lots of, you know, borrowers and lots of lenders working together sort of from the bottom, and then we will see trends that move up. So I wouldn't say, well, as a matter of public policy, we should charge that petroleum engineering major a lower interest rate than someone who's going to be an English major. And I was an English major, so I mock them, and that's totally cool, because English majors end up being very important people. But pie doesn't pay as well right off the bat, at least, as petroleum engineer. At least that's what the data says. So it makes sense that the lender sends signals to potential borrowers, or at least it would be beneficial to say, this is a good investment, and therefore we're not taking as much risk, and you aren't charged as much, or this is a bad idea, and we're going to have to charge you a lot of interest because we don't think we're going to get our money back.
Bob, do you have any thoughts on that?
I'm not as much concerned about the back end, about what happens afterwards, as what happens at the beginning. And maybe I'm falling into the trap of my former self when I used to be on the Hill, and thinking about it legislatively, and thinking that if we could get the institutions that have skin in the game all going forward, I really don't mind if we have to discharge something up front. That's just part of the political bargain. You know, maybe that's not, and maybe I'm not thinking it through purely through a policy lens, but rather a legislative horse trading lens. And if we can get the policy right going forward and get these institutions to have skin in the game, that I'd be willing to discharge some upfront. You just take your fixed costs. I mean, think about it this way: we just had in February of this year, we were expecting a budget deficit for this fiscal year of $1 trillion. And now we're expecting maybe 4.25 for this fiscal year. I think the United States government, the federal government, could absorb an extra $1 trillion in debt and just take over the student debt that's currently existing. And I know that it's a windfall, it'd be unfair for many people who took out, you know, people who are doctors and lawyers today who took out tons of debt. Their salaries are high, they're capable of paying, so you'd have to do something there maybe. We can take on that extra debt for the federal government if we get the policy right going forward. I'd be more than happy about it, because what I really want to do is take the axe to the administrators in these institutions, and I want to have them fired. And I want to have them living in boxes, which is what their marketable skills justify them doing. So if I can get that, if you give me that, I'd be more than willing to take a one-time increase in the debt of the United States government.
So following up on that, you know, following up on the fact that, like, the government owns a lot of these loans and is at least nominally expecting repayment, and yet many of these loans are going to go into default, and while they can't necessarily be discharged, you know, you can't squeeze blood from a stone. So, you know, I guess one question for the panel is, does our current model perhaps create some sort of moral hazard, or at least some sort of false certainty as to the economic impact of these loans? And would we be better off kind of acknowledging reality and taking the loss on?
I'll just say that we are totally deceiving the public about student loans, or at least the government is. We often hear that the federal government makes a profit on student loans, but what we're increasingly finding out is they don't. One of the reasons for this is there are multiple actually loan forgiveness programs. There are 8, I think, repayment plans, and there may be 9 repayment plans now for federal student loans. Many of them involve forgiveness. There's public service loan forgiveness. There's regular forgiveness for people. I think it's if you've made on-time payments for 20 years. There's loan deferment, where it's just sort of continually pushed down the road. And I think in many cases, we actually haven't seen ultimately what's going to happen with people who can't pay back those loans. Yes, some go in default, but many of them, I think maybe the majority, are in deferment, and then some get loan forgiveness. But I think the most important thing that people need to understand is that when you hear that the federal government is going to make a profit, one, that is based on the way the federal government does assessments and predictions of what they're going to return. It doesn't involve fair value accounting. It doesn't really account for the risk of people not paying back. And increasingly what we've seen is that these programs are losing money. And so the public needs to know they're not the profit makers. Somebody like Elizabeth Warren likes to say all the time that they are. And one of the reasons for this is we have so many different ways to either repay your loan over a very long time and then get what's left forgiven, or to put them in deferment, or one way or another kick the can down the road on paying them back.
I'll just jump in real quickly, Neal, and buttress what you said in that if you're in a lending business, all your revenue comes from interest, okay, on loans, if you're in the lending business. And so if you start forgiving debt for any reason, you're discharging principal, which eats into profits very quickly. So I think any cancellation really will mitigate gains by the government. I just don't think the government makes money at anything, to tell you the truth, at a profitable enterprise, but it's personal opinion. But just to jump on your point is that the reason why is when you discharge principal, you have to make up a lot of interest and other loans to make up for that principal that you've discharged. So I don't know what the percentage would be to make it unprofitable. We could calculate that, but that's all.
So I want to back up for a little bit, sort of zoom the camera out a little bit and go back to first principles. That is, what role does the government, what legitimate role, if any, does the government have in providing secondary education to its citizens? And by that I mean sort of facilitating access. You have state schools, so the state is the provider, but even with private schools, what role, if any, do we think that the government legitimately has on that front?
I don't even think they provide an adequate K through 12 education. And I don't think they should be involved in anything beyond grade 12 if they can't get K through 12 right. So I think they're involved in way too many things, the government in general. I think when you said government, I think you're talking big picture government at all levels. They have public schools doing way too much stuff, teaching foreign languages to kids who are never going to use them, teaching science classes just mostly to kids who just want to signal to the college they're going to apply to that they're capable of doing college level work, not because they're actually going to use science. You have kids, the smart math kids are still mostly taking calculus, which might be good for the first year, but they should be taking statistics, which is something they could use on an everyday basis and make sense of the world around them. So I think there are too many problems with K through 12 education for the government to really embark beyond 12. And I think I'd prefer for them to get out of it, and making the colleges guarantee those loans would kind of limit education to those who could really limit higher education to those who could really exploit it.
Anyone else want to opine on that?
Sure. The argument typically given, and I think this applies to K through 12 and higher ed, and it's usually just somebody says, well, education is a public good because it's good for the public. It doesn't usually fit the economic definition of a public good, or they'll say it's for the common good, but somehow or another, we all benefit when lots of people get lots of education. If you ask people to burrow down into that, they'll say, so, what happens is if somebody gets an education, yes, there are lots of benefits that redound to that person. They may get a higher salary. They may be more satisfied in their lives. But there are all these positive externalities for everyone else when somebody has an education. So when they earn more money, they pay more in taxes, so government can do more things. And they're less likely to end up in prison, so we're not paying for them to be in prison. They're actually productive citizens. And if you want to get even slightly more nebulous, there's the argument that if you're educated, this is actually kind of what the beginning of K through 12 was. People like Horace Mann, you could go back before that, Benjamin Rush, and others were saying, more education means more virtuous, good citizens who will care about their country or their state and each other above themselves. And so they say, well, get all these wonderful things that serve the common good, and that's why government should be involved, generally. Why the federal government is involved, actually the Constitution doesn't give them any authority to be involved in this, and so we're actually breaking the law when they do that. But that's the broad argument that's been given for why government is involved, and that people will not consume enough education if it's driven just by their own interest. They won't consume the whatever extra amount is they need to become good citizens because it won't be personal for them. So if we subsidize them, then they'll buy whatever additional amount of education makes them good citizens. The reality is there's no empirical evidence that supports this idea that if people were left to their own devices, they'd consume education but not become good citizens or good Americans. But if we subsidize it, then they they buy the education that helps them get a good job. And they're like, plus I'll buy these 3 civic classes and a Love Your Neighbor seminar or something like that. But that's typically the argument that's been given that has led to the government generally getting more involved, is people on their own won't consume enough education to make it kind of a nice place to live.
Tom, do you have anything?
No, let's just keep on going on other questions.
Sure thing. Well, so, kind of moving one step down the line, right? In all of your opening statements, one thing that struck me is the difference in requirements, the difference in procedures between a private credit market and this credit market. I mean, I think maybe it was you, Neal, who's talking about, the fact that we're making loans to people without regard as to whether or not they're going to be able to pay it back. And, the thought that popped into my head is ability to repay, right? Which is this principle that gets put in a lot in private commercial transactions. You mentioned underwriting, right? And the relative lack of underwriting. I guess the underwriting is the admission into the program is as far as the underwriting goes. And so, one question I have is, if we had a private student loan market that operated under the same rules on the front end as the federal student loan market, put bankruptcy dischargeability to the side for a second, would we accept it, right? Would that be a politically viable alternative, or is this a scenario where the government, because it's the government, gets to play by rules that we wouldn't tolerate for a private actor?
Well, I can start. I always wonder whether anything will be accepted other than government giving stuff away, because politically it's very hard to be against Santa Claus. I think if people were to think through how college funding and student lending in particular worked, they would start to say it's outrageous what the federal government does, because we are saddling millions of people with debt with very little expectation that they're going to be able to complete a program that enables them to earn enough money to pay it back. If a for-profit lender, a private lender would do that, we'd call it predatory. But because the government does it, the assumption is always, well, they're just doing it to help people. And probably, like I said, I think often the motive of policymakers is they do want to help people, but they also don't want to think through all the ramifications of their program. They just see, well, somebody right now can't afford college, or say they can't afford college. Well, we got to give them money so they can afford college, because generally education is good and more education therefore is better. And we're not going to think about all the terrible things these programs have done that were unintended. So politically, It's extremely difficult to reduce the federal lending program. It would be very difficult to say it should be open to, we should no longer crowd out potential private lenders by having the federal government monopolize this. And it's not going to change probably until it's repeatedly emphasized to people that what we think is helping is really hurting far more people than it's helping. And actually it's hurting everybody to the extent that it also fuels tuition inflation and a treadmill, a credential treadmill where you used to only need a high school diploma for something, but then you need a bachelor's degree, but not everybody has a bachelor's degree, then you need a master's degree and those sorts of things. It's very hard though to get a full assessment of the effects of a federal program like student lending into the consciousness of the public, because most people in the public, you know, they have regular jobs, they have lots of political issues they're confronted with, they can't possibly process them all. And so, you know, it falls on people, I guess, like me and others to try and continually explain to people why these are actually bad programs, even if they're the incentive, I mean, even if the desires of the people who support them are good. We've got to go beyond good intentions to actual effects, and we never seem to do that, or rarely in politics.
I just want to chip in on one thing about underwriting, is that you have to remember when you're in the loan business, you can gauge ability to repay much easier than you can gauge willingness to repay. And so that is, you know, currently having student loans not dischargeable really does kind of help out with moral hazard problems, or in terms of, you know, I just decide not to repay for whatever reason. So, you know, it's not enough. And I wasn't, this is my question for you, Neal, wasn't it true that we once had private student loan debt? As I recall, my student loans, when I was getting my doctorate, I had to go to a bank and fill out forms. And I don't know at the back end if the government was behind that or not, but the interest rate was phenomenally high. I do know that. I thought it was a private loan.
Well, as Bob mentioned, that was the old guaranteed loan program.
Okay.
And so you would get your money through a bank, but the government, the federal government basically guaranteed that for a long time, the bank would get 99% of all of that principal and all the interest back if the student defaulted. So it was really still essentially a federal program and federal lending. It's just it worked with banks as intermediaries. We really, from what research I've done, we never really had a private, a robust private college lending industry, but that's because before the federal government got involved in incentivizing people to go to college, almost nobody did. It was a very small percentage of people went and got a college degree, and there was not evidence that, you know, you needed things you could only get in college to contribute to the economy or to be successful. So what appears to happen is the federal government got involved with funding students to consume higher education, and that really fueled the beginning of mass higher education. And so there was never a time when it made sense for there to be a robust, truly private lending industry, because there wasn't a time when people were thinking, I really should go to college because it's very valuable, until the federal government started to drive that train.
One other point I'd like to make is we have to remember that these are kids in many cases who are taking out these loans. And the analogy I'd like to make, and one way to look at it, is imagine a world in which Fannie Mae and Freddie Mac said that they would guarantee any no money down loans for homes made to kids who are 18, 19, 20, 21 years old. What would happen to the price of housing? Well, obviously it would go up. And how responsible would those kids be in the homes they bought? I mean, they're 18 to 21 years old. They don't know that much. I didn't know that much, and I bought my first house when I was, well, like 37 years old. So there'd be a little bit of irresponsibility in the manner in which they went about home buying in that situation, and justifiably so because of their age, because of the fact that the government would be intervening and basically having Fannie and Freddie make these no money down loans. And that's what you have in the student loan market. So yeah, we have a bunch of kids and young adults who are saddled with decisions they made at a very tender age that they should not have been put in a position of. So I do have some sympathies for this idea of taking some portion of what they owe and putting it somewhere else. Now, the Republican Party says no, it should go to the kids who went to these institutions, and the Democratic Party says no, it should go to income taxpayers who aren't even a party to the transaction. So I would change that and use it as a political wedge. Say no, it should go to the administrators and professors who run these institutions instead. But I do have sympathy for the position that these young people are in, because they're really not. They're somewhat myopic, and many think of it as a multi-year vacation from reality before they have to go get a job. And in the housing analogy I gave you, you actually have an asset, the home, that could be repossessed or foreclosed upon. Well, what are they going to give up when the IRS or whatever other institution collects this money comes for their payment? They don't really have any real collateral for it. So I do have some sympathy for the position they're in.
So Bob, that brings up sort of a bigger question, and that is sort of the ethics of this whole thing, right? Is the federal student loan system, sort of from the school to the loan to the rules governing the loan and non-dischargeability, is that ethical? Like, should we consider this to be, an ethical arrangement? And I know 18 is the age of majority, 18 is the age where you can sign a contract, but in this scenario, have we created a system that runs into some ethical problems?
It's a really good question. So I would answer in two ways. Number one, I think the ethical question is beyond my pay grade. Okay, I'm an economist. I'm a macroeconomist. I'm trying to forecast the economy over 24 months in advance. I really don't have any expertise in ethics, and so it's just my sense of it is it seems a little shady, but I can't really drill down much deeper on that. The other thing is that maybe 18 shouldn't be the age of majority for entering the contract. So this is really a relic of the Vietnam War, and people looked at 18-year-old kids coming home in boxes and said, if they could fight for a country, why can't they drink? Why can't they vote? And those are different issues. Encumbering yourself for the next 20 plus years on a loan, maybe that's something for older people. Frankly, I think voting should be too. And that's something different from fighting for your country. You want young people with testosterone pumping in the field fighting for your country. Voting, encumbering yourself for multiple decades with student loans might be a different sort of thing. And maybe you want somebody to co-guarantee these loans for 18 years old. For kids who are 18, maybe you wait to graduate school for them to encumber themselves.
Bob, I was thinking of that, a similar point that Neal brought up, and you have too, and I've actually observed it over the years that upperclassmen, juniors, and seniors are completely different people than freshmen and sophomores. And so I just wonder if it ought to be harder to get a student loan when you're a freshman, kind of unproven, so to speak, or have it co-signed by parents or maybe the university for freshman year or something. I don't know, but I see
you coming my way, Tom. I'm just happy with that.
Well, I just said maybe though.
Okay.
Just to kind of offer a friendly maybe, but I do think that one size fits none here. That we're making the decision through time, allowing people to take on student debt at any age, and I've just noticed just casual empiricism in the classroom over the years that juniors and seniors are completely different. You can just pick them out on a campus versus the freshman and the sophomore. You really can't. And I just don't know if they are better decision makers. I don't know that. And I don't know the 18-year-olds are necessarily worse decision makers, but the maturity level certainly seems different. And somehow treating people the same throughout their college career, obviously graduate school students kind of have an idea that where they're going to go. If they're going to go to law school, medical school, advanced engineering degrees. The MBA market is changing drastically over time into specialized masters as a result, I think, of the broadness of the MBA. But anyway, I just wanted to chip in on that casual empiricism fact.
Thanks, Tom. Neal, do you have anything on the ethics of the student loan environment?
Yeah, well, I'm not an ethicist either, but it doesn't matter to me. I'll say whatever I think is moral or horribly immoral. But I think that a lot of this is driven by good incentives. So to that extent, you may say, well, people are probably in many cases really trying to do what they think is best. At least the policymakers are. I think what I find troubling is, I don't know whether I'd call it ethical or unethical, but I think it's problematic, is that our political discussion when we start talking about student aid and student loans often leads to demonization. So I've talked about this for a long time, and if I say something like, well, there's all these negative outcomes associated with student loans and federal student aid, I often am immediately confronted with this idea that, well, I only want some people to be able to go to college, and it's always people like me. There's always this assumption that I'm some rich guy, and that I only want people who look like me to go to college, or who are privileged or whatever. And that's not really what it is. I've been confronted with the idea that I'm trying to de-skill the economy. I've never understood that one, because I don't know how I benefit from an economy where nobody has any skills, but I've been confronted with that too. And I think, as in all our political discussions, we need to stop trying to win so much and destroy those we disagree with, and have honest discussions about what are the pros and cons of the policy. But if you bring up the cons of something like student lending, you're very quickly open to demonization, which is really problematic, because there is so much evidence that this is actually hurting the people we want to help the most. If you look at data that shows the percentage of bachelor's degrees that are held by people from the lowest income quartile, it may be quintile, but I think it's quartile, in terms of income of the family, the lowest income quartile, again, I think it's quartile, their share of degrees hasn't gone up at all since like 1970, which is when a lot of this really started to ramp up. And part of that is because who are you pricing out the most? Who's most likely to be intimidated by a very high sticker price than the lowest income people? And so there's so much evidence that the people we want to help the most are actually being hurt by this. And I just would like to have a discussion, a national discussion, that where we focus on the evidence and not just immediately go to, well, whoever doesn't want to expand these loans just hates people, or for some reason wants to rip skills out of the economy. But that's kind of personal, because I've experienced it, and I have very thin skin.
So kind of on that point, we've got a question from the audience, and it's basically, how would a private student loan market handle industries like education, where, at least traditionally, or maybe not traditionally, but at least recently, a college degree is a threshold requirement. It's necessary to have this, and yet the pay tends to be relatively low. How is a private market going to facilitate that? So Neal, let's start with you. What do you think?
Sure. Education is a tough one to start with, because a lot of the reason that the salaries are relatively low for teachers is that they're in the government monopoly, where they cannot compete first of all, where government systems set these sort of almost kind of arbitrary, you must have a degree and you must have a master's degree to go to the next level. And the research typically doesn't support the idea that these degrees drive better teaching. So part of the problem of this particular example is probably the K through 12 system is far too rigid and controlled by government, which isn't driven to act efficiently, and that's a problem. But it's also somewhat the case that even though teachers often don't make the same as other professionals, earn the same like doctors and lawyers, and there are lots of arguments for and against that, but still a teacher, and especially a public school teacher, earns a salary that is pretty consistent, that is not extremely low. Certainly it's high enough that you can pay back student loans, the average student loan. I did a study on this about 15 years ago, so it's a little dated, but it's very clear that you can pay back those loans. And what you might see is lenders saying, okay, it doesn't make sense to you to go to 4 years to get a degree, 4 years of college, but we'd pay for 3 years, and that may incentivize colleges saying, we're going to have a 3-year teacher program because this is more efficient, and that would require then school districts to start to accept that 3-year program. But we really should go beyond just something like education, again, that's so government dominated. And what I think you'd see is that private lenders would price things differently depending on what you want to study, but that would give you the incentives to not spend a whole lot of time in college if you wanted to be a fine arts major maybe, but more time if you wanted to become that petroleum engineer, and it would send very important signals to potential students about what makes sense for them to study. I think the big question is always, well, what about collateral? But I actually think that there's a lot of data that enables you to predict how well a student's going to do, not perfectly, but of course you pool all this to pool risk. But that says, look, somebody who has a high GPA, especially from a high school that's pretty well regarded and has pretty high SAT or ACT scores or lots of AP tests, something like that, is probably going to be pretty successful in college. And you could price also based on that and pretty well capture risk.
So kind of to expand upon that, question for the whole group, which is like, let's say we did introduce more market function into this market, things like, different prices for different majors or whatever. What impact do you see that happening on college education? Like, what are the second order effects that you would anticipate seeing in that case?
Well, I think if you raise the price of engineering, for example, you'll get more poets. Okay, people will substitute out. There'll be a price substitution effect, I think. And I don't know. I think the whole variable pricing issue is, we can't solve the single pricing issue. I don't know how we would attack a multiple pricing issue. And one of the questions from the audience is saying that the growth in student loan debt is in the graduate programs. And so I don't know what that means necessarily for pricing, but it certainly means that ability to repay or forgiveness certainly would benefit those graduate students more than a 2-year college degree person, in my view. But
Neal, do you have anything to add?
Do I?
Do you?
Well, I mean, I was thinking, at least in my previous answer, was more about terms of a loan. I do think there may be some benefit for colleges to do differentiated pricing based on the program. That goes a little bit beyond what I'm prepared to tell a college to do, because colleges probably know their own needs and costs better than I do. But from a lending perspective, I think you'd actually see more generous terms for somebody who is going to major in engineering than somebody who's going to major like me in English, because the risk is lower, assuming that person has demonstrated some likely ability to complete that program. The risk is lower, and so you can have more generous terms for that person. I do think, colleges do all sorts of stuff that may make some sense if it were truly a private system where they'll subsidize the classics department with maybe a business department, because the business department gets lots of people to come and pay for their courses. Classics doesn't have as many students, but there's an argument certainly to be made by colleges that you still need that classics department for a real educational institution, even if it's not used. And I would hate to have public policy decide, okay, well, the classics department is just not okay. Or kind of famously in Florida, where there was lots of subsidies for state institutions, governor, I think it was can't remember which one it was. It was the last, Scott, I think it was, said, look, I just don't see any point in subsidizing anthropology programs because there's not a lot of demand for anthropologists. And I totally understand that from an economic standpoint, but I also understand where anthropology can be a valuable thing for people to study for humanity. And I don't want every decision being made by law based on the returns to that investment monetarily.
My guess is there are plenty of anthropology majors who are among the rioters in Portland and Seattle these days. I think we should actually tax the anthropologists, if anything. Here's my thought about this. Let's say the federal government, and this may be a little bit different. Let's say the federal government would start saying, you know, we're going to be a little tougher on the student loans that are going to English majors because they don't pay as well, or the poetry majors versus the engineers because they pay better. Here's what's going to happen. The institutions are going to cheat. They're already cheating because they take kids who are capable of really getting an education in many places or receiving an education, and they're teaching them garbage in many cases too. Not Tom, okay, but just the rest of them. So what are they going to do if the poetry majors or the English lit majors have a worse financial situation? They're going to take the engineering classes. They're going to take the English lit classes, relabel them engineering somehow, and put them in the engineering department. And what they'll do is they'll sit there and read crap in the engineering schools. They'll dumb down engineering so that the kinds of people who now go to English literature will start going to the engineering college or engineering college at the university and take a lower grade class of engineering. They'll manipulate the system just like they're doing now. So I don't think in the end that would work.
I might start calling myself a verbal engineering major.
There you go. Yeah, so there'll be verbal engineering. There'll be language engineers.
There's a question from the audience I see on abolishing tuition for public schools versus private schools. I thought about the effect of this, and I think it'll drive an even bigger wedge. If you give away something for free, it'll be overconsumed, and it'll separate people who can pay for a college degree from a private school. I mean, there will be a different branding issue. And I am not for free tuition because even a low dollar amount, going from $0 to $1 is a big percentage change, as we all know. And having some skin in the game matters for people. And if students can just consume education at zero price, I don't see the value of that product being very high.
Yeah, and if you look at countries that sort of give it away for free, most of them have very stringent rationing about who can get a degree. And it's the American Enterprise Institute, I think, did a study 2 or 3 years ago that sort of showed an inverse correlation where the more likely you are to give it away or the closer to free a country gets, the smaller the percentage, I think, of the population that has a degree, because you have to do that rationing too. So.
So, I mean, is it possible that that's actually better if a lot of people are going to college either as sort of a consumption choice or because they feel they need the credential, not that they need the skills, but they need the credential, and so they have to pay the toll? Would it potentially be better to say, look, we're going to have, college or post-secondary education? I think this is what they do in Germany, where you have different types of post-secondary education, right? You have like technical post-secondary education, you have what looks kind of like a liberal arts education, and you sort people into it based upon demonstrated aptitude and interest and go that way. I mean, is there a possibility, to play devil's advocate, that would cut down on the credential inflation? Because,
well, overall, I'm for free choice. And I don't really like the sorting, bundling thing, having somebody sit over the top and decide who can go where. I think that flies in the face of free choice. It might work well. I mean, at the end, I don't know, but just at a gut level, I'm not for selecting people ex ante into different programs. People can get better through time and choose, you know, and when they start a particular degree, they might switch. I started in accounting, and I was very capable on paper of accounting. The problem is I was the world's worst accountant. And so I noticed that I was acing all my econ classes without even studying there. And I put all this studying effort into accounting, and I was horrible at accounting. You know, I just barely hanging on the edge. So being a good economist, I said, gee whiz, you know, it seems to me that economics is for me. So I made the switch and away from a very high paying career in accounting. I even had a job lined up when I was a sophomore in college, where I'd just graduate and come here, join this firm, and, you know, the pathway is golden. The only problem is actually I had the on paper material to do the degree, but when it came time to performing, I was just an abysmal failure at it. So I can do accounting now, though. So when I teach financial management, I can still construct income statements, balance sheets, source and use of funds, all those things that I couldn't do when I was 18, I'm very capable of doing today. So just as a disclaimer, not to worry.
So now, we have the university system, and it's obviously highly wound around public policy. But like, what are there sort of alternative or private innovations that might help address this problem? Not necessarily for people who are currently saddled with debt, but for folks going forward. And a couple that come to mind. One of the comments from the audience talks about alternative government education programs that drive people into workforce training, or there are products like tuition guarantee or salary guarantee insurance. There's a company called Degree, which full disclosure, I've talked to them. I'm not trying to endorse their product. I don't know if it works or not, but it's out there, right? And it seeks to guarantee graduate income to help mitigate this risk. Do you guys think that there are alternatives out there that we could use to help mitigate the harms that are being caused by the current system?
One of the things that I've observed over the years is that companies are actually giving, in interview process, they give aptitude tests basically, and problem solving, and here's a problem, can you solve this using Excel? I don't think that existed when I first started teaching, but it is existing today. So the market response to this race to the bottom on just giving everybody a degree, the market actually, the private market seems to try to sort people out at the end through interviewing process. So that's just as an aside, perhaps, to your question, Brian.
Neal, sorry.
Sure. Well, I mean, we do have some beginning. There are private lenders out there. There are just not very many of them, and it's extremely difficult to compete against the federal government because the federal government is playing with someone else's money. So there are some of those out there. There are places like Purdue University that are trying income share agreements, at least to try and change. Instead of going for a loan where as soon as you graduate, you may be earning nothing, but you still have to make your monthly payment. The idea is that you pay a percentage of your income for a set amount of time. So if you're not earning anything, you're not paying anything. If you're earning a lot, you're paying a lot. There are people dabbling in that. But I think something we often overlook when we talk about higher education is the K through 12 pipeline. And Brian, what you mentioned about in Germany, for instance, you take an exam and you either get to go to a university or you get some more vocational kind of training. We don't want that to be the way Germany and other countries used to do it, where essentially you're in a school, you're taking a test when you're in 8th grade or 10th grade, and that's determining your future. But we do want a system that we don't have in K through 12 education, where people who don't want a college prep program can more easily pursue what we used to call vocational or VOTech, but increasingly that can mean not internship programs, but apprenticeship programs, more robust, we'll call it vocational learning, but more robust sort of skills training than currently the K through 12 system is oriented toward, because for the most part, politicians say the K through 12 system is good if it produces high test scores, in particular, a lot of people going to college. And we need to go to a system K through 12 that's driven by choice. And I think you'd see a lot more people who don't really want to go to college would pursue studies that move in a direction of more sort of hands-on, vocational, skilled, highly technical training. And so we may get the same effect as you were talking about with Germany, where we're not telling basically everyone to go to college, but without the very dangerous sort of heavy hand of government telling kids when they're in 8th grade or 10th grade, your future will be X or your future will be Y. We can let them start to make those decisions for themselves.
So I'm sorry.
No, go ahead, Bob.
Sure. In response to your question, I think in terms of how the private market's adapting a little bit, or has adapted a little bit, I would point out programs like the Charter Financial Analyst Program, the CFA program, which many people see as a substitute for, say, some sort of like master's in finance, or maybe even an MBA, because there's a discrete body of knowledge that you have to know to pass that exam. And so that anybody who has that certification is known as having absorbed that information and that level of understanding, whereas you don't necessarily know what you're getting from somebody who has a degree. So to the extent that education is signaling rather than natural learning, the CFA is a cheaper substitute. And so that is one adaptation that the private market has gone through.
Okay, great. So we're starting to come to the end of our time. I'm going to end this with giving our panelists each an opportunity to say sort of what change they think would be most beneficial to current people saddled with debt, or people who might be undertaking student debt. But I have one controversial question I want to ask first. And Bob, I think I know your answer, but I'm curious what Neal and Tom say. We don't allow student loans to be discharged in bankruptcy. And bankruptcy is when you can't pay back the loan. But to the extent that these loans, or that the universities that are benefiting from these loans are promising students one thing and delivering another, should there be an argument for, at least relieving certain student loans, or something along the lines of fraud? So, curious what you all think about that.
It's an interesting question. I mean, that's essentially what I'm arguing. I think what I'm essentially arguing is that the administrators and professors collectively are defrauding students in a mass way. Yeah, I'd argue that's okay, but I don't think it takes care of it on a systematic basis, because what are you going to do? Have a separate trial every time there's a discharge? It would be very tough to prove. And so I think it has to be done on a systematic, straightforward basis where you don't have to go through the court system. Hence my idea of having institutions that receive money, which could include public universities. They could say, hey, if you're receiving student loan funds, then we're going to charge you higher tuition, or the states could change their laws. So it has to be done on a more systematic basis than that.
Yeah, I think it would be tough to really prove fraud. You could do it if a school said, if you go through this program, we guarantee you'll earn $80,000 your first year out of this university, and somebody doesn't earn it, yeah, then you could prove fraud. But even if they just sort of suggest you'll make a lot of money when you get out, that's a little bit too nebulous to really nail down and say, well, they told me I make a lot of money and I'm not making a lot of money. And so it's really, I think fraud is difficult to prove, and we want it to be difficult to prove, because otherwise what you see is sort of what we've seen happening to for-profit colleges, is an unpopular sector of this industry will be targeted. and often just harassed without real evidence of fraud. Sometimes there is, but often without. And I don't think we want that either. I think ultimately what we want is people pay with their own money or money they get from others voluntarily.
Just to pipe in a little bit, Brian, I actually do not think that colleges promise one thing and deliver another. I think colleges promise an opportunity to get a college degree. We're not in the business of having students get jobs. We're in the business of educating them. And students have skin in the game in their education, in that they have to put work in. I mean, it's, if it turns out you get a degree but you don't have skill, you just barely qualify for a degree, that's a lot different product than somebody who graduates at the top of their class and is really a hard worker, industrious, all those things. So I don't think colleges are engaged in any kind of fraud. You could maybe argue that through it appears so, but I've never seen, we don't have secret stealthy meetings where we say, how can we defraud these students? We're always, as instructors anyway, trying to figure out how can we improve the program, make it better. And students don't like it when it's harder. They prefer an easier path. And I tell my students all the time, like, you're not competing against me in this course. You're competing against everybody else who's going to get a degree in finance around the country. And you have to put time and effort into it yourself. So, if I shop for a car and it's a lemon, then that's a lot different product, because the automotive companies are promising it's a good car and it's not. That's a little different because I don't have anything to do with the car. I'm just the consumer, I'm just the buyer. But in a college degree program, I was in college for 11 years myself, and my sophomore years were the best 4 years of my life, is what I like to tell my students. But it's really just 4 years master, 4 years bachelor's, 2 years master's, 5 years PhD. But it was a lot of hard work, and I sacrificed a lot to get through. And if I'd have thought that it wasn't worth it, I'd have bailed a long time ago. But I just don't think as a system that we're perpetuating a fraud upon students. The level of debt, the students these days are the ones I talk to, and I talk to them a lot about student debt. They're very conservative. They're very adverse to debt. They try to take as low a debt load as they can, basically. And so, but that's a microcosm of all the students in the university. I'm just seeing finance majors that I talk to. So it's a biased sample, no question about it. But the fact that the students control the process of their own education, how do we get around that? I mean, they actually do control that. So I can give homework assignments, and then Bob and Neal can say, nah. Or they can go, yeah, I'm really going to work hard and either do the extra credit problems and really learn more. And we actually, Bob, we teach topics on the CFA. It's a 3-year program. And so we're striving to become a CFA affiliated school, which means we have to have certain requirements. And one of them is ethics, actually, how to teach ethics in the investments process. So one of our panelists is actually in charge of that, teaching that. I won't reveal who it is.
Just for the audience, I know it's not me.
Yeah.
All
Well,
right.
that narrows it down to me and Neal.
So we have to start wrapping things up. If I could get each of you to quickly give me sort of like, if you could make one reform, what one reform do you think would be most beneficial to the student population?
I'll start. I'll have to qualify this a bit. I would phase out federal student loans. I think that even low-income people who had demonstrated a likely ability to complete a college degree program, especially in something that gives them a good chance to earn a good wage, would be very attractive to private lenders. And I think there are indicators we have of who will be successful, what high school they went to, standardized test scores, AP scores, things like that. But that is not something that's going to happen right away. I actually have written somewhat about, as sort of an incremental move, let's go after plus loans, parent plus loans and grad plus loans, which are loans that they have no means test. And you can borrow however much you need to pay off whatever your cost of attendance is, which could include, paying for a really nice apartment somewhere. And Bill Gates, in theory, could get one of these. They are very skewed toward wealthier people. And why not start with something that actually you could ask somebody at the Libertarian Cato Institute, but you can find people at like the left-leaning Center for American Progress who say this is a very almost kind of regressive program that's only for the wealthy, basically. Let's start by getting rid of something like that most people can agree is extremely counterproductive and goes against what the goal of these programs is supposed to be, which is help people who can't afford college themselves to go if they would benefit from college. So maybe the most immediate thing we do is work to eliminate parent and grad plus loans.
Okay. Bob?
As I'm kind of a Johnny One Note, but I would have the institution share the risk of a failed education. And the way I see it is, political conservatives need to stop bashing the students for having taken out these loans at a young age and failed to prosper with them in those cases where they do not prosper, and really bash the institutions. Instead, drive a political wedge between these students and the institutions that they were supposedly educated by.
Tom?
Well, one of the things I would do is just not allow any forgiveness of the loans. I mean, if the government's in the program, in the business of making loans, they should make decisions that benefit the taxpayers. And I'm not for forgiving loans in any case. That said, I do think that we should maybe investigate ways to help students a pathway out of debt, lowering the interest rate on loans, maybe have a program where if you, to incent people to pay back, if you pay back 10 or 12 in a row, the government makes a principal-only payment toward your student loan. I mean, that's certainly not, in the big picture, it'd be better if the student pays everything back, but in terms of canceling any debt, if we're already giving away money just canceling debt, I'd rather see it given to people who are actually making the effort to repay their debt. And we do have this debt overhang right now. Going forward, I am for more private lenders, but the problem is, it's like, if I start a private lending business, how can I compete against an entity that just basically doesn't worry about losing money? And I think that's an issue that would be very difficult for the private lenders, because government can't be in at all if we're going to have a private market, in my opinion. But to start, I would look for ways to provide incentives for people to pay back the debt, lower the interest rate on current debt, and have a pathway out where perhaps the government pays, if you pay 12 in a row, we'll pay the 13th one for you, all principal, and we can recalculate the amount you owe, off we go. That's the path, that's what I would choose to try to investigate, and just steer clear of any talk of canceling debt.
Okay. Well, I'd like to thank the panelists for a fantastic conversation, and I will turn it over to Will now.
Thank you. Appreciate your work today as moderator, Brian, and to all our panelists. This was a fantastic discussion. I know I learned something, and I hope our audience enjoyed it as well. And with that, we'll conclude, but I'll just remind, as I brought up at the beginning, that stay tuned next month. Brian and I will be sitting down to talk about his research into the over-politicization of the banking system. And I'm very excited about that discussion. So good day to all, and thank you for joining us.